Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB. We are very pleased to be here with you live streaming from our studios here at Barangaroo, or perhaps you're listening to us on podcast.
Indeed. You're Nadine Blaney. I'm Juliette Sarli on a very strong day for the market as we wrap up the month of July and ahead of reporting season.
Yeah, we started out this session, some people were calling it dangerous, really a big potential for a lot of volatility. Why? Well, not just that inflation rate at 11.30, and you can see where the market took a big leg up, but we had tech to digest, the BOJ, and we're on the cusp of the FOMC.
Yeah, absolutely. And just worth noting that the S&P ASX 200 has hit a record high of 8,084 points, and the Nikkei closing higher by 1.5% on the back of that Bank of Japan rate hike. Hard to believe that we are now starting to see rate hikes coming through from that central bank. But it has been a big day here, as you mentioned, inflation really center stage. Good enough, and that's really the point, because everybody's looking at all the different numbers. But when you look at the trimmed mean, which is the RBA's preferred measure, it came in 3.9%, so it is below that 4% that the market was looking for. It is not a 4 in front, and it is easing from those levels when we had a 6 in front couple of years ago.
Yeah, not as quickly as the RBA would like, but it was really interesting to see the different newspaper headlines or digital paper headlines. One choosing to focus on inflation on an annual basis coming in higher than it was previously, and then others choosing to take the tack. This does give the RBA, the consensus that I can see, breathing room in August at least. So that changes the conversation ahead of next Tuesday, 2:30.
Yeah, well, I was just talking to Timothy Rocks from Evans and Partners. I mean, he's not an economist, but he did say, look, there is more likelihood then you will see a cut now. CommBank came through saying they stick with their call for a November cut. So, that chatter of a rate hike next week certainly seems to have dissipated. The BOJ, though, it is hiking.
Not only that, but it has also changed its bond buying program. And so we have watched the yield on the 5-year JGB up 7.5 basis points at 0.666%, highest since November 2009. So changing dynamics around the Asian region. And really interesting to see that in contrast to what we're expecting to come from the FOMC. So hold is consensus. However, we could see some dovish language coming through.
Yeah, and I think that's really interestingly reflected in the yen as well, because as you would expect, when the BOJ did hike, the yen did spike, but the dollar now moving higher. So the dollar is back at 153 yen. So choppiness in terms of that.
We haven't even mentioned Microsoft yet. Let's take a look at our tech sector here. The verdict is out. So what we saw was an initial knee-jerk reaction to that Microsoft report. We'll chat with our guest about it in a little bit more detail. However, through the conference call, we started to see some of that negativity being pared back, and actually a really good day on market for our tech names. We won't get an interest rate hike, at least in August, it seems.
Yeah, indeed. All right, let's have a look at the miners, because of course that was an area that got hit very hard yesterday, particularly on that block trade through Fortescue. A big bounce back today from Fortescue, up 2.4%. Rio, of course, out with its numbers as well, and it does look like the market liked those, up by 2.2%. Rio recording at $5.8 billion in profit after tax for the half year.
Let's check out energy. I will admit I haven't had my eye on these players, but that's a pretty strong performance coming through for the likes of Woodside, for Santos, for Beach Energy as well as some of those smaller players. And just looking in on oil, we are expecting OPEC Plus to stick with its output policy at its August 1st meeting. And we're seeing oil rebounding on that real sort of ratcheting up of pressure in the Middle East after that Hamas leader was killed in Iran.
All right, well, the tug between CBA and BHP back in focus. CBA shooting past BHP as the country's most valuable company, because it's now at $137.33.
Oh boy. You mentioned Rio Tinto. So there was a little bit of disappointment around the dividend, but most of the analysis that I read saying that it looked pretty strong overall. adjusted earnings coming through at $12.1 billion, and pretty good commentary coming through on some of its growth projects as well.
Origin, though, dropped its share price down about 2%. Revenue 12% lower than full year 23, with the company citing lower commodity prices there.
Oh, Star Entertainment. Its Chief Risk Officer, Scott Saunders, has stepped down from his position. He'll be leaving on January the 31st.
All right, let's wrap it all up with our guest, Mark Gardner from MPC Markets, on a very busy, historic day, you could say.
Indeed.
BOJ hiking, Microsoft's numbers, of course, CBA back in 4. What took and inflation?
But I must say,
Oh, yes.
you've got
Yes.
bears on
You've
your
got bears
tie.
on your
Yeah,
tie.
no, it's
Wrong day, buddy.
I know for the Australian market, yeah, but not for the AI thematic, I fear, by the end of the week. So, I mean, Microsoft, I think, really carried on from Google, where basically, I think Google slightly beat. Microsoft was very close, but there's no AI revenue in any of these numbers. Azure was a little bit disappointing, but I wouldn't say it was down 6 or 7% disappointing. So I think it's very clear when I'm reading, doing the morning report and things, is the investors are starting to now get a little bit impatient about, they want to see some results. I would imagine a lot of boards are going to get really, they've gone and bought how many $45,000 chipsets from NVIDIA and things. They're going to want to see a return on their investment, and there's been a distinct absence of any revenue from those. So that, I mean, look, it doesn't really carry our tech stocks haven't rallied 40-50% like they have. I would think we're going to hold up pretty well overall, even with this Nasdaq coming back off. I mean, the concentration risk really is a US problem, and I think any sort of panic selling in the US, I think in the Australian market you can probably fade a little bit or buy into, because we didn't rally anywhere near as much as those guys. Our stocks are particularly coming into earnings season. Fairly conservative. They pay dividends, things like that. It's different. So I think that really distinct difference in the makeup of our indices will probably mean we fare a lot better if there's continued negativity in that AI thematic. So I mean, look, if one company drops 6%, we're talking they're $300 billion moves. So
it's so interesting, because at times we bemoan the fact that we can't get AI exposure really locally. But so you're saying it might save us?
I think it'll save us, particularly to the downside. Absolutely. I mean, where those mining stocks are at the moment, it's already forward pricing in a recession. And I even think the banks here are extraordinarily elevated, and I think that'll come horribly unstuck over earnings season. CBA's at the most expensive PE it's ever been, and I just can't see where they're going to remotely make the money. But having said that, you've got the likes of Fortescue, BHP and Rio that are still putting in decent performances that are priced really horribly. I mean, yesterday we sort of bounced back in those energy stocks, but that energy and commodities got savage yesterday. So I think even with some earnings disappointment in that financial end that we're expecting, I think it'll be compensated by the likes of BHP, Rio, Fortescue.
And it's today also, I mean, July 31, end of the month.
Yeah, I mean that always helps. But yeah, you're looking at the likes of Fortescue now with, I think the analysts are expecting a 20% reduction in their dividend. Yesterday's prices, was still about 9.5% fully franked. Like you can't get yield like that pretty much anywhere. I mean, CBA's yields is about to go below 3%. So, and like I said, I don't really see where they're going to justify that, this price move. But I may be wrong, but it seems extraordinarily high on a historical basis.
Look, A-REITs, for example, I'm thinking of interest rate sensitive sectors. They've run ahead of, I suppose, some of the expectations when it comes to rates based on what's happening in the United States. But how does your thinking change around any sectors, given that it looks as if we won't see another hike coming from the RBA? Yeah,
I think that higher for longer, most Wednesdays I've said, the RBA will find any excuse not to hike, because they'll look foolish. And look, election year as well, that would look bad for the Labor government. But yeah, we've gone into a long-term structured product with REITs because it could be a noisy period while there's speculation on interest rates. But you got to look at Charter Hall Long WALE is roughly a 20% discount to last valuation. CIP's around the same. GPT's like nearly a 30% discount still to last valuations. So these valuations are done like pretty regularly, 6 months, 6 to 12 months. So I think the bounce back is from pretty horrible lows. I mean, office we still have concerns around generally. But look, I think the likes of industrial, etc. Stockland's probably not a bad play. They've got a large land bank. The government's really under pressure to push out residential homes. So I think you'll see some. I think you'll see some recovery in those. In those, and the valuations are still likely to come down next valuation, but they're not coming. They're not coming down 25% in my opinion. So, and a lot of them they're below their gearing their gearing ratios. Centuria and Charter Hall have got like average lease lengths of 10 years, indexed to inflation, like them. But it's just, I think the fear's dissipating out of that section of the market now, and there's still a lot of wiggle room to the upside. I probably wouldn't expect them to be busting back through valuations until we get through the next 6 to 12 months. But real estate generally is the sector that falls the most when we go into a recession, but it's the sector that bounces the fastest and the hardest back out of it. So if you time it well, you can make quite good money in those stocks.
All right, let's talk about the US, the Fed.
Fed, yeah. So what are we at? 150% chance of a rate cut and something in September.
Yeah.
I think it's going to be higher for longer. I mean, we've been 100% chance of a rate cut about 5 times this year. So
remember when there was meant to be 6 this year?
We should have had 6 already, I think, judging by. I still think they've got wiggle room to push it out. I think we're absolutely zero chance of easing here in this year. I would still sort of sticking to that late first quarter, early second quarter next year. But I think overall it'll be no move, but probably jawboning that lower rates are coming, I suppose. That generally is not. The first rate cut's generally not been a good thing for the S&P on average. If you take out the black swan events like the GFC, etc., on average it drops about 12% in the 6 months after the first rate cut, and then it bottoms out and bounces. So I think AI is adding a degree of difficulty to that because it's a kind of a once in a 20-year event, and that sort of thematic kicking off as hard as it has. But yeah, I would expect they'll be jawboning lower rates, but probably I wouldn't expect maybe November. I think they'll try to keep rates higher for longer, make sure inflation's definitely contained, but give the market the impression that the clarity and surety that they are definitely coming down, which will sort of do half the job for them.
So is your tie going to come in handy tonight or not? I'm just looking at the E-minis, positive, heading into this US session.
I think it will on Thursday night. Apple, obviously 52% of their revenue is iPhone sales. They went to the market and rallied on the back of saying that they were going to effectively white label OpenAI with the new iPhone, and you won't be able to use it on the old iPhones. And then announced this week that there is now a 2-month delay for that phone to come out. So that's a huge hit to their revenue, and I don't think the market's pricing that in at the moment. AWS will be interesting because usually when Azure does poorly, AWS can benefit. Because the money needs to be spent generally. You see it in the social media platforms sometimes, like Meta will be down and Snap might be up or the likes. But I think as well, Amazon's probably second in the queue for selling rack space for AI. If there's an absence of that revenue coming through, I would expect them probably to be a little bit low. But I think Apple's a real risk because they're pretty much iPhones, and they've just given everyone an excuse to wait for the next one, and then they've delayed it by 2 months. So I can't see their outlook for the next quarter being great. They'll probably bounce back and get a huge shift back up.
And at some point there's saturation too, right?
Yeah, that's exactly right. So I mean, all we've got is an extra camera lens for the last 7 or 8 years. This is the first time that it's a bit disappointing for them. This is the first time they've actually had new technology for a long, long time. And then to have that delay, I think it bodes poorly for this quarter in particular. It's how they spin it, I suppose. But yeah, there's a lot of heat in those 7 stocks. Let's face it. Any like a 10% or 15% readjustment in those stocks it's not the end of the world. You're still probably up 35% this year.
Well, that's the thing. And that's what I think sometimes knee-jerk reaction on these results. People are looking for an excuse to take some profits.
Yeah, exactly.
People have done well.
People have done extraordinarily well.
Yeah.
Like, and NVIDIA will be interesting now because without this, obviously we're getting the earnings reports where there's no revenue coming through, but obviously the companies would be backing off their spending. You know, you can't just go like splurging on super expensive chips if you've got nothing coming in the doors. So it'd be interesting to see what whether that backlog reduces and or whether the bigger companies are still spending and trying to catch up. So it'll be an interesting one.
Well, still unknowns.
Yes. All right. It comes
As
around
always.
so quickly, your spot every Wednesday. It's great, but it's always an interesting conversation. I'm just thinking ahead to next week when we will have got some of those numbers, what we'll be talking about then.
Yeah, well, we'll have to wait and see, I suppose.
Mark
Find
Gardner.
something. Well, let me guess. Australian earnings.
Unless we want to talk about AGL next week. I think Satire.
It's a slow burn at the beginning.
Satire and Temple and Webster might be interesting next week.
Yeah.
Really starts to kick off, week 2 and 3 of August. So.
Yeah. All right, Mark Gardner from MPC
Cheers.
Markets. Thanks
Take care.
as always.
Speaking of reporting season, Rio Tinto, we got our expert guests to weigh in on it. Philip Pepe from Shaw & Partners and Michael Wayne from Medallion Financial.
Commodity stocks follow commodity prices, and while those commodities are on the decline, it's probably going to be hard for this company to outperform. Probably going to wait to see where those commodity prices settle, whether consensus is correct or not. But once they've settled, our house view is copper grows higher over time, but we tend to agree with consensus that iron ore probably does fall before it goes up. So I would call this one a hold just to see where those two commodities settle over the next week to 1 month.
They did achieve a reasonable price for the iron ore, only marginally lower than the previous 12 months. But it's all going to be about the outlook. They still are heavily reliant on iron ore, despite the fact that copper is hopefully becoming a bigger contribution for them in the years to come. They've got some investments going in the lithium space as well. So there's a bit going on there, but ultimately China and the commodity story will play a big part in the direction of the Rio shares.
Let's have a look at the leaders and laggards on a record high for the ASX 200. Deep yellow, so the uranium stocks having a good day, up 6.5%. Liontown also on that list. Charter Hall, we're talking about the interest rate sensitive stocks there, but it looks like resources mainly driving those gains.
Yeah, Nickel Industries is one of those resources names out with its production report, so market liking what it saw, and Liontown has put out a alert that it has made first production delivered from its Kathleen Valley project on schedule. So it's nice to hit your mark, isn't it? All right, laggards though. And we've got Origin Energy. We already detailed what's going on with Origin, and Telix Pharmaceuticals down by 1.7%. It held an investor call today. And Gold Road Resources, it did come out with a production report as well.
You spoke to the Adore Beauty incoming CEO the other day, didn't you? Yeah. Brockman Mining up 21% in the small end of town, along with Bluebet having a good day, Legacy Iron Ore, Magnetic Resources and Appen.
Yeah, sometimes a rising tide does lift all boats, okay? There's Energy Resources off by 31%, and you can see there just a bit of a crew in the resources space primarily. But it doesn't take anything away, to your point, Juliette, about this really strong performance coming through from this local market. It looks as if it's going to be sitting up to end the day by 1.75% July.
The best month so far.
What a month.
Yeah.
I forgot sort of that we're month end, and that was one of the reasons we thought we could sort of go any way today, but it was really that inflation market 11:30 that really did turn the tide.
Yeah, all right, so now we turn our attention to the Fed and of course the FOMC decision. We've also got the ADP report, the non-farm employment change ahead of the key one that'll come through on Friday night, pending home sales, employment costs, and big names out as well. We've got Meta, the Facebook parent, Boeing, Qualcomm, MasterCard, Norwegian Cruise Line, so a bit of a pulse on consumers and consumer spending there too.
But also importantly, we'll get a more serious reaction to the Microsoft. Now, I'm not saying that the share price moves weren't serious, but it's held its investor conference call. People would have been crunching their numbers.
Do you know what also went down again overnight?
What?
Microsoft. There was a 10-hour outage. So Microsoft had thousands of users reporting issues with Microsoft Outlook and Minecraft on the day that it released earnings.
Yeah, not good. We've had our own tech issues ourselves today, but we are past them, and it's wonderful to be there. All right, let's get across tomorrow here locally. We get the trade balance, and we've got Kelly Partners Group's reporting and another quarterly report or two coming from the mining space.
All right, so a record high on the ASX 200. Have a look at where the COB 200 is. Also a very solid session, up by something like 1.6% on that index, 1,544. And the Australian share market, as I mentioned, this benign inflation ruling out a rate hike. July, the best month of 2024. The financials at a record high, with CBA taking the baton once again as the most valuable company on the Australian market. $137, hard to believe. That's where CBA's shares sit.
It's crazy. Shout out to the BOJ that did lift interest rates and outlined a bond taper program. We'll see how that washes through global markets through the overnight period.
We'll see you tomorrow.